Good morning, everybody, and welcome to our April webinar. And this month, we're looking at the final countdown to general purpose financial statements. As always, I have with me our partner in Sydney, Kevin Frohbus. Morning, Kevin.
Hello, Aletta. How are you? And good morning, everybody. Lovely to be back after a month or two's break.
Yeah, fantastic. I hope everybody is back after Easter, or if you are still away and only watch the recording after Anzac Day, I hope you had a good break. Kevin, I have to say I'm cheating today. I'm actually on the south coast of New South Wales, and when I look up, I can see the beach and I can see the ocean. So I'm fine. I'm feeling very privileged that I can do that.
Well, I'm
And
one
I know
better than
you've
you.
been away as well, so it's good to be back, right?
It is. I'll do one better than you. As always, I'm in the office and I'm just looking out Sydney Harbour. So, if you move to Sydney, Aletta, that's your view all the time.
Oh, that's so funny. I love Melbourne, Kevin. But anyway, lovely to have everybody here. We would like to start today to welcome our new IFRS and corporate reporting partner Etienne Host, to the team. Now, Etienne joins us from the Department of Treasury and Finance from the Victorian Government. And so he brings with him a lot of public sector experience and knowledge. Etienne previously also lived and worked in Perth for 8 years, and therefore he understands the natural resources sector really well. Etienne's whole philosophy is to be a problem solver and to help people, which fits in so nicely with what our why is at BDO, people helping people achieve their dreams. So we're very excited to welcome Etienne to our team. Etienne will focus on helping CFOs and finance teams, and he'll focus on public sector and the natural resources sector. So I just wanted to flag that with you all. We're very excited to have Etienne with us. The other thing that I thought I should flag, I know our clients are starting to think about 30 June 2022 reporting. And as you know, in May, we have our normal getting ready for 30 June 2022 webinar. However, maybe an early heads up. At BDO, we've spent a lot of time to reorganize all our resources, and these are free resources, just to reorganize it on the website so it's easier for you to access what you're looking for. So if you go to this particular place on the website, you can see the link is there. You can pick any topic, leases, revenue, financial instruments, whatever, you pick a topic. And when you open it up, you will see in there a section on articles, all the newsletter articles we've published on that topic, resources issued by BDO Global, so that's our IFRS in practice, IFRS at a glance. You will see all the webinars that was presented and recorded on that topic. If there were any IFRIC agenda decisions, we have it there. And then the last one we've recently added is online e-learning or online training resources. So all of that organized per topic, so it's easier for you to get access to it. The other thing we've done is we've launched a new training hub. And in our training hub, we've got 3 parts. We've got the webinars, which you're attending here, free webinars. We've got seminars, which are 2-hour pre-recorded sessions. It's covering, at the stage, I think we've released around 20 accounting standards. There's workbooks, case studies, solutions, and we also have e-learning programs. So we use articulate rise, where you can work through the theory, through examples, self-assess, through a number of topics. So a lot of resources available to help you to upskill yourself and your team to get ready for 30 June reporting. So if you look at our e-learning programs, this is just a screenshot On some of them, the e-learning programs is a paid program, and you can pick, let's say, agriculture or borrowing cost or business combinations, and you get access to these programs, and it's quite extensive training. However, today we're looking at transitioning to general purpose financial statements or the end of special purpose financial statements. We have split the session in two big parts. The first part is a bit of an overview of this transition from special purpose to general purpose, and we touch on for-profits, not-for-profits, and where else we see this in practice. In the second big section, we talk about, so how do you transition from special purpose to general purpose? We make it practical. We've got a 5-step project. We list the things you should consider, and we also outline how we can potentially help you. And you know, it's not long now until we get to that transition date, 30 June 2022. So Kevin, at this stage, I'll hand over to you, who will do most of the presenting. And it's because I'm on annual leave and I want to look at the beach, Kevin. I don't know how you guys work in Sydney, if you always have the beautiful views, but today I'm looking forward to hear from you.
Thank you, Aletta. And very happy to do the session for us. So I'll take over. Aletta will drive the slides as always, so keep her on her toes. So we'll start with an overview of the transition to general purpose financial statements. Now this section is not really anything new. As this session today is entitled, it's a countdown, because what's really happening is the big date of transition is kind of approaching. I mean, a lot of entities have actually done the transition already, or some entities have actually taken advantage of early transitional allowances, which got them over the line quicker or easier. But for everybody else, the time is about to hit 30 June 2022 and then 31 December 2022. If you've got December year ends as sort of the last drop dead date. So the transition to general purpose financials, this overview section is one of the first of two big sessions today, but virtually every slide in this section has come from a previous session we've done with you over the last 2 years. And the reason for it is we've been introducing you to the topic over some time. But I'll take you back to January 2022, the webinar we did in January 2022. And this is a bit of a recap of what we said to you about what's hot in 2022. We were talking about pandemic stimulus, deal and life cycle support, which is obviously a lot of finance functions moving through their life cycles and looking for assistance with, you know, corporate reporting and changes to complex transactions. But the two that's really sort of applicable today are the new and developing reporting standards and the finance function effectiveness. Now, we said this was going to be hot, and it is hot. And the reason why it's hot is because, as we said, special purpose is giving way to general purpose. It's one of the reasons why new and developing reporting standards is becoming a hot topic in 2022. And the finance function effectiveness, we won't talk too much about that today, but I do want to make reference to it because everything you do in terms of transitioning to general purpose is an opportunity to also make sure that your finance function is operating effectively. And the reason why I want to point out to it is because you can't really do the transition to general purpose, especially if you're in a complex life cycle stage, without making sure your operational practices follow it. And by the way, that's where Etienne Kroos fits in. He's coming in on the finance function effectiveness, and you'll see the IFRS and corporate reporting team at BDO nationally, as well as in Sydney and Melbourne. We're all moving towards sort of CFO advisory type work because you can't really do the two separately. So these were the two big topics we mentioned in January 2022, and that's why I'm talking about them today, because the drop dead date is 30 June 2022 for June year ends to transition to general purpose financials if you are a for-profit, as you will see later on in the presentation. So hopping through to the next one, Aletta, also from the January 2022 webinar, there were two topics that we said were not hot, and yeah, they are. Special purpose financial statements and lease accounting in Excel. Now, I'm going to be focusing on the special purpose financial statements today. I'm sure we'll talk about lease accounting at some point because the two really go together. Special purpose financial statements are giving way to general purpose financials, and one of the things you have to do is lease accounting. And as Aletta will tell you, it keeps coming back at us like a boomerang. We keep throwing this out into the ether, and it keeps coming back at us. No one seems to be ready for lease accounting even 2 years in, and the two are intrinsically linked. But let's focus on special purpose financial. Yes, Aletta.
I think on lease accounting, we said, what's not hot definitely is lease accounting in Excel. And it's absolutely amazing. 30 June 2022 would be the third year that we're doing lease accounting if you're a for-profit under AASB 16 or IFRS 16. And a lot of people have tried to do this in Excel, and they come to us now and we're trying to unravel what has happened in the past and get them onto a technology solution or a system or a process. Because, what we're saying is clients post-pandemic want to focus on growth, want to focus on survival, don't want to have people spend their time on a compliance exercise, which is lease accounting. It's a very important compliance exercise because it indicates what your liabilities are and the assets you've got available, but ultimately very much compliance. And as I said to you earlier, I'm amazed that 3 years later, our team is still growing, we're still getting more staff, and we're getting more and more clients that are saying, help us. And the help is not how to do the calculation. Our clients know that. They want to save time. They want to be more efficient and effective in doing the calculations. So please reach out to Kevin or I if you want to talk about that. Kevin, I think in the June webinar, if I remember correctly, we look at lease accounting in depth and we share some of the war stories. But it's important. If you want to get this ready for 30 June, you have to shout out as soon as possible, please.
Yeah. Yeah, no, look, Aletta, that's true. And continuing on that theme, and I think on the next slide, I actually have a bit more detail on this. Going back to the January 22 webinar, all the lessons about what we're talking about in corporate reporting right now are kind of on this slide. Lease management on the one side is really just one big topic that is problematic in IFRS. But the reason why Aletta and I keep coming back to it is because it's a pure example of how, in order to comply with IFRS, you need to get your data capturing, your data processing in line and activated to generate the information. And it's not just something you do at the end of the year. This is a continuous prospective standard. You've got to keep things going, and you've got to basically keep it going month in, month out, essentially part of your monthly reporting. Well, on the transition to IFRS, it's the same really. The transition to general purpose, it's the same really. So we'll be talking today on the right side of this diagram, which is special purpose financials, which is not hot anymore, giving way to general purpose financials. It's not just about disclosure. Some of you might be preparing financials under special purpose, using recognition and measurement requirements that are aligned with IFRS, and you think it's just disclosure, but when you actually make the transition, you actually find out, first of all, that there are things you might have missed, but actually there's an opportunity to get things right. And it's kind of linked to the lease accounting, getting your data capturing and processing correct. It's not just about a disclosure. Now, on the transitioning to general purpose financials, this slide was actually up on the screen in our January webinar. And we spoke about the 5 steps, and I'll run them through you again. It's your GPS assessment. In other words, establish whether you're required to move and actually become general purpose financial reporting. And let's face it, the general principle is if you're a for-profit this year and you need to lodge your account somewhere, so let's say large proprietary have to lodge with ASIC, you're most likely you're there. You actually have to move to general purpose. This is happening now. It's not a bad dream. It's happening. 30 June is upon us. The health check is something we run for clients who are facing this reality. And the health check is a step you do before anything else to actually understand what do you do that is compliant with IFRS and figure out a best transition approach. So this is the really, this is gathering the information before you do anything to understand where are you in the IFRS world, how close are you to what you're trying to achieve, and so forth. The gap analysis is then when you actually look at your systems and processes and make sure you actually have the skills, the resources, and the systems to make the jump, and then you implement your transitional method to get it on there, and then you prepare disclosures. So those are the 5 steps, and we run our advisory practice along those 5 steps. You don't have to do all of them depending on where you are. We don't, and we help clients at various stages. One of the ones we often do with clients is the health check. We do a lot of those where clients don't know where to start, and so we just do the health check. We get them to understand where they are, and then we sort of put a plan together to go from there. But where I want to spend some time today is actually in the top right-hand side of this diagram. Now, this was in the January 2022 webinar, and I didn't talk too much about it then, but having done a few of these transitions with some clients in the last 6 months, it struck me that a lot of clients don't understand how to use this 5-step approach to actually achieve a business outcome. And I call those the asset-rich, profit-rich, and compliance-rich approaches, because most clients who are just doing financial statements for compliance purposes assume that the way to do the 5 steps is to do the quickest path through, which achieves the least amount of effort, and it's really just for compliance purposes. In other words, I've got to lodge my accounts with the regulator. And that's fine. If that's the approach you want to go for it. But what this transition to general purpose financial statements, yes, although it's a requirement for this year for most for-profit entities, some of our clients have started to realize that actually there's an opportunity here. And the opportunity is actually to choose a transition method as well as associated accounting policies that actually maximize either an asset-rich approach or a profit-rich approach. And what we mean by that is an asset-rich approach is one which allows you to maximize your asset value on your balance sheet. A profit-rich approach is one that maximizes profit in your income statement, and a compliance-rich approach is really just one that is the easiest compliance way to get to IFRS compliance or general purpose compliance. So today I'm going to spend a bit of time going through asset-rich and profit-rich, but more so asset-rich. And the reason for that is because it's not just about getting onto general purpose. It's actually about recognizing that this process is an opportunity to get you onto an approach and a set of accounting policies that maximizes one of those two, profit or assets, or both, but also achieves your compliance requirements to get onto general purpose. So that's the objective today. So don't just rush into this for compliance purposes. Take the opportunity to understand the opportunities that this presents to actually get you onto the one that achieves your business approach, asset-rich, profit-rich, and then you can align your data processing and all those things in your systems that come with it to actually achieve your annual reporting every year under one of those two alternatives. Okay, let's do some of the overview theory. This is just what's going on here. What is this end of special purpose? If you've missed this in our previous webinars or you're not quite on board, I'll rush through these. For the for-profit entities, as I've mentioned, if you've got a requirement to lodge your financials, normally with ASIC or so forth, you're probably there. I mean, there are some other bits and pieces around that, but let's say for simplicity, if you're preparing financial purposes for a compliance reason, ASIC or whoever it may be, and you've got to lodge those accounts with the regulator, whatever, you're most likely on general purpose financial statement requirement from the latest 2022. You're in the year. This is the year it's going to happen. That means you've got to prepare consolidated financials. You've got to transition away from special purpose, so go from special purpose to general purpose. Most entities who haven't prepared consolidated financials under special purpose accounts will have to do consolidated accounts for the first time. The way you get there is this evil standard called IFRS 1, first time adoption of Australian accounting standards. That's the gatekeeper standard. What that standard does is it says, okay, you want to come do this IFRS thing or this AASB Australian accounting standards thing. In order to start doing general purpose financial statements, you've got to come through this IFRS 1. There is an exception to that. You can go a different way. We call that the IAS 8 approach, which I'll come to. But generally speaking, to get to general purpose accounts, what you got to do is transition from old special purpose. You choose an application year, which is going to be 2022 if you haven't done it already, and you gatekeeper through IFRS 1. And IFRS 1 tells you how to get onto IFRS. That's recognition and measurement. So things you're not already doing under IFRS to record your assets and liabilities and income and expense and to measure them, you'll start doing them under this standard. This standard not only gets you onto IFRS, but it allows you some opportunities, in inverted commas, to make some decisions to get onto IFRS the fast and easiest way. But those are the opportunities to get you onto asset-rich or profit-rich standards. So you choose your optional exemptions under IFRS 1 to get there using approaches that maximize your business objective. Are you trying to maximize your net asset position? Are you trying to maximize your profit position? Or are you just trying to do this for compliance purposes? In other words, the quickest and easiest way. Now, there are two tiers of general purpose financials. Look, tier one is probably not going to be the area we'll focus on today, because tier one, most organizations who are doing tier one or who are going to do tier one are already doing it, and that's your full IFRS compliance or your full AASB. Those guys, if you're going from special purpose to tier one, general purpose, that's full IFRS compliance, recognition, measurement, all disclosures and presentation. And the only way to get there is through this gatekeeper standard IFRS 1. Tier two, that's probably going to be most of you on this webinar today who haven't already done it. Tier two is simplified disclosures. Now, simplified disclosures replaces the old reduced disclosure requirements. It is different. There is a bit more in terms of simplified disclosure that's required than used to be under the reduced disclosure, but it's not full IFRS in terms of disclosure. But tier two is really just the disclosure that's simplified. Recognition and measurement, you still have to do that as if you were a full tier one. So it's really just the disclosures that's less there. Now, IFRS 1 is the gatekeeper standard for tier two. In other words, you have to comply, or you can go the IAS 8.1 or the AASB 108 now. That one is a traditional, I don't know if you remember the good old days, if you made an error or you adopted a new accounting standard, you went through IAS 8 where you restated the prior year financials and you kind of just adopted the standard. So that is available. It's a bit easier, but there's no opportunity gateways through there, because what you're really doing is just restating what you've done to get onto the new policies. But IFRS 1 is the gatekeeper standard. That's the one with all the opportunities, and that's the one I'm going to say to you is let's look at that today. I would just say, and this is a bit of general advice with an asterisk, in other words, don't do this without seeking proper advice from Aletta or I or somebody at BDO in the IFRS and corporate reporting team, but you would usually use the IAS 8.1 when you've either made an error in the past and you're just trying to fix it, or maybe you don't care so much about asset rich and profit risk, so you're just trying to do easy compliance approach. You might go that way because it's the quick and easy way of just getting you onto the standard correctly that you haven't applied according to the IFRS recognition and measurement. But the IFRS 1 is the one I think personally that you've got all the opportunities to choose policies that can then meet an asset rich or profit rich approach. I hope there wasn't too much there. The next standard is going to blow. The next slide is really just a summary of that. And really, this one I've been using this one for 3 years now. Basically saying you're working up to mandatory timing. By the time you get to 30 June 2022, you have to get onto a general purpose tier 1 or tier 2 model if you are currently on special purpose and have to move. The early adoption transition alternatives are pretty much gone. They're behind you. You don't have access to them anymore. You've got to apply this now under 30 June 2022. If you've got a December year end, that'll be 31 December 2022, but it's still all this year. And there were some reliefs in terms of transitioning early. If you went early under tier 2 accounting, you got some relief from restating comparative presentation. That's kind of disappeared under the 30 June 2022. You don't have access to that anymore, but you do get relief from error and accounting policy distinctions. Now, I'll come back to that later, but what that basically means is you don't really need to disclose what changes you're making in terms of getting onto IFRS general purpose tier 1 or 2, but between what was an error and an accounting policy change. So you might change to a new recognition and measurement because you've adopted a new accounting policy to get onto general purpose. That's an accounting policy change. Or you might be doing this and you've realized, oops, I've actually made an error in application in previous years, and I don't want to tell anybody about it. So there's a bit of relief here that you don't have to distinguish between which change you're making in your disclosures if you're getting on tier 2 in the current year. What that means is there's a bit of an opportunity. You can do your transition in the current year, 30 June 2022, from special purpose to general purpose, and you can make some choices along the way and also fix up some errors, and you don't need to disclose which one that was. As long as you get on IFRS recognition and measurement under tier 1 or 2, or tier 2 in that case. So think about that as an opportunity as well, because you don't need to tell anybody the distinction between the two, as long as you get on to full recognition and measurement. They did that in a way to get people onto IFRS, proper compliance, without being whacked on the knuckles for what they might have done in the past. It's a little bit of a relief. And that is also an opportunity. We'll come back to that later on. Hopping forward to the next slide, Aletta. This is also been using this for a couple of years, but this kind of just outlines how we would move forward in terms of general purpose financials and how you'd have to restate comparative periods. It was actually more of a slide that discussed how you could use the comparative relief that existed previously. But if you haven't already done the transition and your 2022 year is going to be your first general purpose financial statements, you have to restate your comparatives. That relief has kind of gone away in terms of this. But essentially what you're doing is transitioning onto general purpose, restating your comparatives. Your date of transition is the first day of the comparative year, so 1 July 2020, or 1 January 2021 if you've got a December year end. I think there's not much more to say there. I think you all understand the concept that if you're transitioning to a new standard, general purpose financials, you'd have to do a comparative restatement. Now, where does AASB 1060 fit in? So what is 1060? This is the simplified disclosure standard. So this is your tier 2. If you're going from special purpose to general purpose tier 1, all accounting standards must be applied. There's no real relief in terms of accounting policy or error presentation distinctions. You literally have to go through IFRS 1, gatekeeper standard, get onto IFRS, prior year restatement, off you go. AASB 1060, where does that fit in? This is the tier 2. You essentially can move into the standard 2 ways, the IFRS 1 way or the AASB 108 or IAS 8 move. That's the alternative option I discussed previously. There's 2 ways to get onto tier 2. In this scenario, same scenario as under tier 1, you've got to apply all recognition and measurement requirements. Yes, you've got to get there on a gatekeeper standard, either IFRS 1 or IAS 1, but there's disclosure relief here. And the disclosure relief is the simplified disclosure. That gets you onto tier 2 presentation. It's the replacement of the old RDR, the reduced disclosure. And what that means is you're not only doing what was disclosed under previous tier 2 accounting, which is reduced disclosure. It's actually a new standard, and 1068 is a comprehensive standard that discloses all the disclosure requirements if you're on tier 2. So it's a single standard. And for those of you who might have had to work with RDR before, I think you had to go to each standard had its own disclosure, and you had to kind of go figure out which parts of it applied to tier 2. AASB 1060 has all the disclosure requirements for tier 2 in one standard, so you can almost use it like a top-down, checklist or disclosure checklist. Not that simple, but you can go there for all your needs. Now, those who are still preparing special purpose, you can carry on doing it the way you were doing it. Not too much to worry about. Okay, here's the impact. What is the impact of this? Now, this slide I put together last night after thinking about it over the weekend, because as Aletta will tell you, I'm sad and lonely. So Easter weekend, I spent some time thinking about what is the impact of all this change. I created this from personal experience that I've gone through, as well as the IFRS teams around the country, the IFRS and corporate reporting teams around the country, where we've helped clients with some of these transitions. And these are sort of some of the big areas where we either came undone, or we got stuck, or things where the clients actually experienced some real question mark moments of what's going on here. So the areas where we constantly find significant effort involved to actually get you onto tier 2 or tier 1 is actually those entities that never prepared consolidated accounts, they're a parent, they've got subsidiaries or joint ventures and associates, they've never prepared consolidated accounts before under special purpose. What's happened now? They've got to prepare consolidated accounts. So they've literally got to go prepare a consolidation for the first time, consolidating all their subsidiaries and so forth. That is an enormous area of effort for a lot of clients to do. They think it's just, oh, I'm going from special purpose to general purpose. I've just got to change some disclosures. That's not the case. You have to prepare consolidation. And the problem with this is the relief you had previously to not restate comparatives was actually gone in previous years. So if you're going to do consolidation now and you haven't done this transition yet, and let's say 30 June 2022 is your first year, you're actually going to have to go back to the first day of your comparative period, so 2 years back, and do your consolidation then and transition forward. And that's what has to be done. Gathering the information for that is quite onerous, as you'll find, because you're essentially starting consolidation not at the date of acquisition of the subsidiary, but you're starting it at the date of your previous your comparative period. So that proves complicated, and that's where the gatekeeper standard comes in, IFRS 1. It tells you how to do that. It helps you establish a consolidation on 1 January or 1 July 2 years back, the start of your comparative period. It gives you guidance through the gatekeeper standard, IFRS 1, how do I prepare this consolidation for the first time? The biggest problems we have with that starting date is entities don't have the information to do it. So they've got to apply gatekeeper rules to try and minimize the impact of not having information that comes from their subsidiaries. But the other thing is a lot of entities never applied business combination accounting in the past. And so they suddenly find they can't actually get their goodwill numbers restated, or they suddenly find they don't have all the information to recognize previously unrecognized intangible assets like customer relationships that they actually acquired when they purchased subsidiaries years ago. All those things become problematic, and a lot of the asset value suddenly saps away from their balance sheets because the standard is unforgiving if you don't really have the information to do a transition through the gatekeeper standard, and it's unforgiving on fair value. One of the biggest things we found when you're doing transition and you're adopting IFRS or general purpose financial statements through the gatekeeper standards is you can't go back and restate for fair value if you don't have the fair value information to begin with. Now that's a general rule. There are some exceptions to that, but generally speaking, if you're adopting on 30 June 2022 and you're going back 2 years to 1 July 2020 as your restatement date, your transition date, you don't have fair value information at that date, the IFRS 1 gatekeeper standard is unforgiving. Can't suddenly start recording fair value on your balance sheet that you didn't have. And that significantly undermines things like the asset-rich approach. If you're trying to maintain asset value on your balance sheet, you don't have the fair value information from before, and you never recorded it, and you don't have it, you're not going to be able to actually put it on there. And that's one of the biggest lost opportunities in terms of adopting IFRS through the standard. The other thing that we're having is the unrecorded arrangements, share-based payments, financial guarantees. Aletta, I don't know about you, but I have been astounded at how many small entities, or even just run of the mom and pop large proprietary type entities that have all these guarantees from owners and guarantees from group companies. And those guarantees, some of them are financial guarantees which need to be recorded, and some of them are insurance contracts. And for reference, you can go back to the webinar, I think Aletta was last month's webinar, which Aletta and Dean did on insurance contracts. If you didn't attend that one, don't think, oh, I'm not an insurance company, I don't need to go and have a look at it. Some guarantees between entities might be insurance contracts for purposes of accounting. You might actually have to apply the insurance contract standard, IFRS 17, and I was astounded at how many of those there are out there. And then warrants and other convertible instruments. Notice I don't say other convertible notes, because convertible notes is often somebody invests in an entity, pays money, and they get the options to convert their loan into shares later on. What we're finding in this transition to IFRS, you just do a very high level contract review of an organization, and you find entities just hand their equity away. So they just issue things like warrants where they're looking for some sort of investor or even just the brother of the husband's wife or whatever has invested in the company and they've been given some sort of agreement which gives them a right to shares down the line. Well, those have to be accounted for, and they've got to be accounted for now, not when it happens. And often those are not recorded as equity; those are liabilities. And so through this transition, we're doing a transition to IFRS or to general purpose financial statements. We're going back 2 years to the transition date, and suddenly all these things that were never recorded under special purpose are suddenly emerging. And that once again just takes away the asset value or the asset rich approach. So those are the areas of effort. They are effort because they require information to be gathered, valuations to be obtained, et cetera, and it takes time. That's probably the biggest giveaway in terms of what is the area of significant impact, is it takes time. So the fact that we're at 30 June 2020 is coming up, that's your transition date, that's your first reporting period on general purpose. You're actually restating 2 years back to your transition date, and if you don't have this information already gathered, it's going to take you a lot longer than you think to actually get on general purpose. So that's what I mean by significant effort. All right, comparative presentation. What I mean by perverse outcomes is if you're moving on to tier 2 presentation, there was an allowance, which a relief which allowed you, if you went early, so 2 years ago or last year, if you got onto general purpose earlier than the current financial year, you were able to get on there without restating your comparators or not presenting comparatives under the adopted IFRS. That's given some weird perverse outcomes where you actually can't compare the current year adopted general purpose financials to what was previously reported under special purpose. And there was a reason for that. They gave this transitional relief to allow entities to get onto IFRS as quick as possible. So for that 1 year, there wouldn't be comparability, but eventually that year will disappear. And as you roll from 1 year to the next, you will have comparable information under IFRS or general purpose accounting. That's pretty much gone now, so you're not really going to have access to that. If you haven't yet got onto IFRS general purpose tier 1 or 2 and you're required to move from special purpose in the current year, you won't have access to the sort of reliefs. You will have to restate your comparable information and present it under the chosen methodology. As I've mentioned a lot up until now, what is the biggest impact? The biggest impact of this that I've noticed in the last 6 months helping clients is the lost opportunities to maintain asset value. Lots of entities come along, they're trying to retain their goodwill numbers, they're trying to retain their revalued asset numbers, they don't want to lose their net asset value under special purpose, and it turns out that they've been doing a whole bunch of things under special purpose that is actually not allowed under IFRS or general purpose reporting. Things like revaluing intangible assets without an active market, and suddenly they're writing back all this asset value and it's disappearing off their balance sheet. The thing is it doesn't have to be that way. You can maximize the ability to keep your asset value if you've got the information available, and if you choose your asset policies or your IFRS 1 gatekeeper policies that maximize those sort of outcomes. You don't have to just do what you've been doing in the past. But in order to do that, you've got to be smart, you've got to be quick, you've got to understand how the standard, that gatekeeper standard, IFRS 1, allows you to pick and choose optional exemptions to maximize whichever thing you're trying to do, profit rich or asset rich. But you've really got to choose that carefully, wisely, and quickly in order to maximize that. All right, I think that's waffle enough on the for-profits. Aletta, do you want to talk about not-for-profits?
Yes, so I thought I'll just add in, what is the situation for not-for-profit entities? I'm a board member at a not-for-profit entity, and we had a board meeting last night where we talked about this, are we going to move to general purpose? And actually the question is, when do we go from special purpose to general purpose? I've tried to give you some guidance on what the current state is. And I think that the key thing to remember is for not-for-profit entities, and this is what I said to my fellow board members last night, for not-for-profit entities, nothing has changed yet. We're still waiting for the AASB to finalize their ongoing profit project. Therefore, to keep on doing what you've always been doing, I think is a safe approach, because we don't know what's going to happen going forward. I think it's important, though, to think about what might change in 2 or 3 or 4 or 5 years' time, and to get ready for that change. I'm not saying change now, I'm saying hold steady, but start to think what it could look like. Now, important though, currently, under the current framework for not-for-profits, the threshold question is still, is the not-for-profit entity a reporting entity, as defined in SAC 1, Statement of Accounting Concept 1. So if currently you are a reporting entity, so there are users out there relying on your financial statements to make decisions, and they don't have access to other information to base their decisions on, if you're a reporting entity, you have to prepare general purpose financial statements. So that would have been the case in the past and potentially still the case in 2022. So nothing there's changed. The thresholds question for not-for-profits would still be, are you a reporting entity? If you are a reporting entity, you have a choice to prepare general purpose tier 1, the full disclosures, or general purpose tier 2, the lesser disclosures. So previously that would have been RTR disclosures, but from this year onwards, it will be simplified disclosures. So very important, if you're a not-for-profit entity and you've previously prepared general purpose financial statements under tier 2, there is a change for you because tier 2 has changed. It's no longer RDR, it's now simplified disclosures under AASB 1060. If you are not a reporting entity, you can continue to prepare special purpose financial statements. That's allowed by the ACNC, that's allowed by the accounting standards, and there are additional disclosure requirements. So while we're waiting for the AASB to finalize their project, if you are preparing special purpose financial statements, please tell us exactly what you're doing. Tell us what your accounting policies are. Tell us which standards you are complying with the recognition and measurement and which not. So please be clear and transparent. So maybe to wrap it up, everything is changing for for-profit entities. There's no longer a definition of reporting entity. It's all about whether you're lodging financial statements with the regulator. That change is not there yet for not-for-profits. So it's a little bit of steady state and wait and see. The other reason for my wait and see, or the key reason for wait and see, is we are expecting that the standard will say in future, if you're a not-for-profit and you're lodging financial statements on a public record, for example, the ACNC, we're expecting that you will then be required to do general purpose financial statements, okay? But the AASB is working on what is the meaning of general purpose financial statements for not-for-profits. Currently, there's only tier 1 and tier 2. The AASB is currently working on a potential tier 3 with different recognition and measurement and disclosures. So I think it's important to let the AASB finish that project, that if you go to general purpose, you go to the appropriate tier, which might be tier 3, which is not that onerous or expected to be not that onerous. So, Kevin, it's a little bit of a steady state for not-for-profits.
Yeah, it's interesting. Just something I was just actually reading this morning as well. If you are a charity, just remember that there is some background requirements to move you on to some general purpose concepts this year. Things like key management personnel, I think, is happening for the large charities this year. That's also happening for 30 June 2022. So in addition to all of this, just be aware that there are some requirements for disclosure changes in this year related to key management personnel. I think it's for the large only, Aletta. You might want to just kind of nod your head if that's true. I think it was large charities that at a minimum have to do KMP disclosures at 30 June 22.
KMP and
2020
related party disclosures, Kevin. And
related
it's
party. That's right.
we've actually included an article in Corporate Reporting Insights that will be issued tomorrow on what those new KMP and related party disclosures are.
There you go.
You know,
So
Cheryl is all over it.
all over it. All right. Where else are we seeing this? Look, I thought I'd add the slide in because it's not just those entities that are going from special purpose to general purpose because of the compliance requirement this year. We're actually seeing a lot of entities that are required to do, shall we call it, an IFRS conversion or transition because of IPOs and due diligences. And where I'm specifically going to refer in these two slides is we've been heavily involved in the Sydney office, in particular doing IFRS health checks, where we have a look at whether an entity is actually, how far are they from IFRS compliance, or what have they done wrong, or what are they doing right, as well as conversions themselves, helping them with transitions onto IFRS, who want to do an IPO. So they go from special purpose to IPO, general purpose IFRS compliance in one big jump. And you can see that because the ASX had, I think, 194 IPOs in 2021. I mean, that's astounding. Ranked in the top 5 internationally for IPOs. So that's happening, and it's happening quickly. And a lot of those are going from special purpose, believe it or not, to general purpose in order to do that transition. So it's not just compliance requirements for your large PTYs. Entities jumping onto the ASX need to do this too. Now, BDO has an ASX listing guide that we issue every year, and the 2022 IPO handbook has been released. And there's a little link there. You can click on that link where Aletta will point you to with the amounts. So it's on the resources section of our website. And Aletta, if you jump to the next slide, I think I've actually put in there a little timeline. This is taken from the guide, and as you can see there, we've actually added to this guide this year a complete IFRS or GAAP transition as one of the steps. Now, it doesn't always happen at step 2. Sometimes it actually happens at step 0 before the audit, depending on how you're getting there. But more and more, we're realizing that entities who are trying to ASX list don't understand the importance of IFRS and AASB compliance as part of that transition. And so what's happening is they're getting to meeting with the due diligence committees, and they're meeting with the ASX, steps 3, 4s, and 5s, and suddenly they realize they've got financial statements that don't comply with IFRS. And an almighty disaster happens at that point, because you can't use your special purpose historical accounts to list. You actually have to go and restate and get onto IFRS. So build this into your transition process if this is where you are in your life cycle and you're looking for ASX compliance. But the guide is available, and we do deal with IFRS and the GAAP transition quite extensively in the guide. So please feel free to download that and reach out if this is in your your life cycle. Now, we've got some polls. Aletta, do you want to run the polls here? I think we've got some questions to keep you going.
Yes, I thought we'll ask a few questions just to get a bit of feedback. Our first question is, are you transitioning from special purpose to general purpose for 30 June 2022? We want to now get an idea how many people are actually transitioning. And it's a few quick fire questions that we've got here, Kevin. So we're not going to keep it open for too long. Very simple. There's no correct answer here. Simple yes, no, or not sure. Maybe still thinking about it. Haven't done the analysis. At this stage, we've got about 40% of our attendees have voted. It would be great if we can get voting a little bit higher. It's a bit of informal research Kevin and I are doing, so please help us with that. We really appreciate your efforts.
And don't be afraid to use the not sure. If you're not sure, that's fine. We're happy with the honesty.
Yeah, because some people, still have to do an assessment, Kevin, on whether they need to do general purpose or not. They might still have to do a position paper on it. So that's absolutely fine.
And the not sure is essentially step 1 of our 5-step plan, which is general purpose financial statement assessment. Do I have to move is the first question. And that can be whether you're planning an IPO, you might have to go through that step, or you're just getting to 30 June 2022 reporting and you don't actually know. You're a for-profit, you're lodging with ASIC, and you actually don't know the answer to that. It's probably good to ask yourself the question, do I need to move this year? Right.
So
Interestingly,
I would imagine that many of the people who've answered no, Kevin, are potentially already doing general purpose financial statements, and therefore, they're not transitioning this year, or many of our clients and attendees would be in that space. I think it is interesting to potentially challenge, if you're already doing general purpose, whether you're using, or applying the accounting standards correctly from a compliance perspective.
that's right.
But also thinking of Kevin's asset-rich or profit-rich approach, whether you could potentially change accounting policies to get to certain approaches. I mean, sometimes there is an ability to change, or as you enter into new transactions and you adopt standards for the first time, you can select an accounting policy to follow those. So I still think it's relevant, Kevin.
Yeah, and I think a lot of people who answer no to that question might already think they're on general purpose, but actually they're just doing recognition and measurement of general, but haven't done the disclosure change, which is actually to tier 2. So that you might want to just go and check yourself under there. All right. If you answered yes to the Aletta, go for it.
Sorry. So if you are doing a transition in the current year, our question is, have you conducted an IFRS health check? Now, Kevin, I think what you've just said is some people might have been doing the recognition and measurement of the accounting standards as if it's general purpose, but they haven't really done the disclosures. The other one that I think one should think about, a lot of people in the past argued, we've done all the recognition and measurement, we haven't done disclosure because we haven't done consolidation because consolidation is a disclosure standard. Now that approach is no longer valid. In order to do general purpose, you have to consider AASB 10 around consolidated financials in order to prepare general purpose financials. So I would say, have you done a health check? Have you thought about whether you're really complying with all the standards, which standards are problematic, what data you have, whether you should use IFRS 1 or IAS 8? So again, thank you very much for everybody contributing. It's fantastic to get the feedback. So Kevin, for the people transitioning, 60% actually said they haven't done the health check yet. So I would advise them to, very quickly get onto the health check. We're 2.5 months out from 30 June.
Absolutely.
And that health check can trip you up. I don't know if you've got an additional comment there.
Yeah, it's an interesting one because the health check, what that actually is in many cases is you what are you doing and how are you complying? But remember, it doesn't only have to be what am I doing wrong or what am I doing not complying to IFRS. It can also be done as an opportunity to identify the opportunities. What am I doing, even if it's compliant? But what could I be doing if through the gatekeeper standard, I actually want to choose an asset-rich or a profit-rich type of approach? So absolutely critical step. All right. If no, Aletta?
Our third poll is really, if you are not transitioning and if you're not already doing general purpose financials, do you have a position paper in place to support why you can continue to do special purpose financial statements? And I think this is critical, even for not-for-profits. All entities who want to continue to do special purpose financial statements in 2022 and ongoing need a position paper to justify that thinking. Your auditors will demand it, and I can speak from experience. Either our auditors demand it from clients, or where I'm on a board, it's being demanded by our auditors. So this position paper is critical to look at the requirements, and how you document it will be very different depending on whether you are a for-profit or a not-for-profit. As a not-for-profit, it's whether you're a reporting entity or not. Where for-profits, it's about why are you preparing, are you lodging, what does your regulator require? So interesting, if you're not preparing special purpose, do you have a position paper in place? And we can see, roughly 40% of people don't have that position paper in place. The auditors will ask for this, one of their first questions. And if you're unsure, let's do a little bit of work and find out. I think that's critical.
Aletta, the unsure actually interests me because I would assume or presume that many of the people who are saying unsure aren't the people who would be preparing that position paper, but they may actually be on a board or a governance committee where they should be asking the management team, has this been done? So it's an interesting answer there that you want to take away. And Aletta, I'd imagine you'd be asking that question as you said on your board, is this in place, ready to go?
Absolutely.
Right.
So, Kevin, I know we don't have a lot of time left, but I know you wanted to talk about the transition, the planning, and the project management. So
Yeah.
I'll hand back to you to talk through this.
Thank you. And you're right, Aletta, I don't need a lot of time on this, but jumping into planning and project management. Look, the purpose of this section is to just remind you of the 5-step process. General purpose financial statement assessment, your plan for this on how you're going to get from special purpose to general purpose. If it's going to happen and you need to do this year, or you've chosen to do this, you need to plan this and manage this, but also going through your general purpose and your general purpose health check, the first 2 steps, those are your where am I steps. And the third step, gap analysis, what do I need to get there before implementing? Do not just jump into this. Where am I? And what do I need to get there are really critical before you actually push the how do I do this and implement stage. So do a health check of where you are before you jump into it. And then when you're doing your gap analysis is where do I want to be and do I have the systems and resources to get there? And where do I want to be is your asset or profit or compliance rich purpose. Now that's what's been missing before. Before you jump into implementing is what are you actually trying to do? Are you trying to maximize assets? Are you trying to maximize profit? Or are you just trying to do this for compliance? So bring that in as never before. That's perhaps maybe been missing from some of our previous webinars because we hadn't really done a lot of them, but we are now. This is your plan, your purpose. How are you currently preparing? How are you required to? What is the most appropriate transitional approach? But the transitional approach doesn't have to be just for compliance. You can choose the gatekeeper standard, IFRS 1, to maximize the business outcome, asset or profit. And you'll see where can you do that. I think there's a slide that I've put after this one, Aletta. Well, I'll come to it. It's in your policy choices. Now, yeah, this is. I'll spend the next 2 minutes on this slide because this is really my takeaway standard in terms of planning and management. What does a rich approach look like? And these are just examples. Compliance rich, keep doing what you've done, do the least possible to change. That gets you to a general purpose set of financials. You'll probably, if you're doing all your recognition and measurement correctly, maybe that's just disclosure you have to worry about. But if you want to do profit rich, the gatekeeper type options, the IFRS 1 options that allow you to get there are things like, can I choose an approach, and I'll jump down to the minimized revaluation models. Profit rich is the sort of thing that you actually want to maximize profit. So you're going to choose accounting policies on your gatekeeper approach that give you, for example, the least amount of depreciation in the future. How do you get the least amount of depreciation in the future? Don't choose the revaluation model for your assets. That'll give you the lowest depreciation. That'll maximize your profit. But the asset rich is the one I want to talk about, the one on the right-hand side. This one is the one that maximizes your asset approaches, gives you the most outcome on your net asset position, but it's the hardest to achieve in practice. It's things like choosing on transition an option to revalue your assets on a one-time basis to get your assets up to their fair value on transition. That becomes your deemed cost going forward. It doesn't force you to choose transition, but it maximizes your fair value on transition. Those are the sorts of policies that are allowed under the IFRS 1 gatekeeper standard, but they are the hardest to get right because you need fair value information on transition, and you need to be really You really be sneaky about which ones you choose, because it's not that they're forcing you to choose policies going forward that you are stuck with. It's a one-time option to essentially adopt IFRS but maximize the asset-rich side of your approach. The other way to do this is your goodwill and your acquisition of businesses before transition. You can do that and you can maximize your asset approach, but you need to have the information before, and you need to be sneaky the way you use it. Sneaky doesn't mean you're actually doing something wrong. All it means is you're choosing the best possible route to get there with the information available that maximizes the net asset approach. I'll leave that to you there. You can take that away yourself and have a look at it. Where do you apply these rich strategies? Really, entities that previously applied all recognition and measurement standards, as well as those that didn't. In other words, if you're going from special purpose to general purpose in the current year, you're going to have to choose a gatekeeper standard to get there, which is IFRS 1, for example. But you can apply the rich standard in the transitional relief that's available to you, or the policy selections that are available to you under IFRS 1. And even if you have applied all the recognition and measurement standard under special purpose before you get to general purpose, on the right-hand side, check what you're trying to achieve with your choice of policies, because you're not locked into those recognition and measurement requirements from before. You can actually potentially apply the gatekeeper standard IFRS 1 to achieve a rich strategy, whether it be profit or asset, and then off you go under general purpose from that point forward. What I'm basically saying on this slide is, even if you've done recognition and measurement under special purpose before, don't lose the opportunity to check in with your gatekeeper standard, IFRS 1, on whether or not you might want to choose some other policy selection as a one-off basis through IFRS 1, this one-time allowance, to get onto tier 1 or 2 general purpose presentations and preparation, but actually maximize, shall I call it, an asset-rich or profit-rich approach in the way you get there. All right. Can't recall what else I put on in the slides there, Aletta. I think it's probably how we can help you slides. We can jump over that one. How can we help you with this? Look, there's a couple of ways we can help you transition to general purpose. And I think I've got the 5-stage process now. Now this isn't the 5 steps that we've spoken about previously. This is actually the project management map that we use. So once you're actually decided you're onto general purpose and you've actually done your health check, we'll actually put a project management plan together for you and actually do diagnostic and scoping of your systems, plan your transition for you, bring solutions development in, whether that's actually new technology, IT technology or so forth, and then help you with the implementation. The items in red are the ones that we do a lot of with our clients. We don't do all of these phases. Clients will sometimes do some of this themselves, but the corporate reporting and IFRS team at BDO often helps with the phase 1, 2, and 3, because we've got the IFRS and corporate reporting knowledge that can actually help your team, your finance teams, with the diagnostic scoping, design, planning, and solutions development. So those 3 really are, once you've decided what you want to do, and also which IFRS 1 gatekeeper provisions do you want to use, how do you actually put this into practice? We can help you and your finance team with your diagnostic scoping, your planning, and solutions development. In other words, embed this into your finance team. This is the CFO advisory stuff that we can assist your finance team once you're actually into the implementation phase of your 5-step plan. So give us a ring if you need some assistance with that.
Kevin, thank you very much for that. So what I've also put in here is, if you're just doing the transition, we've got our 5 steps. However, if you're looking at the whole project management, we've got our phases that we work through, and the 2 really work together. Do you need assistance? A bit of a recap. As you know, BDO Lead, our amazing technology solution, is getting more and more popular as we speak. We're currently doing yet another big implementation of the SaaS solution, but we also have the outsourcing option, and that team also growing by the day. I know the pain is real. Please reach out to us so we can help you. If you are starting to look at getting audit ready for 30 June 2022 reporting season, please reach out to us. we can assist you in very many ways. We've got staff out at clients for periods of 6 to 8 to 10 weeks to help them to get audit ready. We know there's a lot of staff shortages, but this is something we can help you with. As we've said earlier, if you need training on or additional information, you can read all about it on our website, and quite easy to access. We also have a training hub, which looking at detailed training on all the accounting standards, not the high level risk flyover that Kevin and I do most months. And if you want to buy e-learning for your team, you can do that as well. Obviously, you're attending this webinar, but there's a series of monthly webinars where you get attendance certificates for CPD purposes, potentially. Please register for those. Next month's webinar is critically important, getting ready for 30 June 2022, where we look at all the latest and greatest. We have also recently launched a monthly ESG and sustainability webinar. We've already done the first two around demystifying the ESG process and applying a framework. On the 10th of May, Ashley Bleeker and I will be looking at stakeholder engagement in this ESG process, which is very important. And we're currently doing that at BDO. We've reached out to our partners and staff, and we'll also be reaching out to our clients as part of the stakeholder engagement. If you're not already receiving our monthly corporate reporting insights, please register to receive this. It's an amazing publication. We've got a wonderful lady, Cheryl Levine, that's looking after this publication, and she's been doing it for many, many years. She's been at BDO in Australia for more than 25 years. She's really our corporate knowledge and corporate library. Anything that happens, she puts it in this corporate reporting publication. Really a fantastic publication. Even before I joined BDO, I subscribed to this when I was at other firms. It's really high quality. And then just a reminder, you know, Etienne joined us. We now have 6 corporate IFRS and corporate reporting leaders in our national team. I'm looking after national. Ashley Woodley is in Perth. Kevin is in Sydney. Etienne with me in Melbourne. Clark Gerald in Brisbane, and Lynn in Adelaide. However, please feel free to reach out to us and we'll help you. We want to help our clients, so please reach out to any of us. Our broader team, and we've got another person joining us on the 23rd of May, but this is our broader team. You can see Ashley and I are in green because we also work in ESG and sustainability, but a nice big team that can help you. So if you want assistance with audit ready, lease accounting, CFO advisory, GPFS transition, please reach out. We've got the people who specialize in this and are really good at this. So please reach out to us. Kevin, thank you very much for doing all the heavy lifting today. I really appreciate it. I'm now going to enjoy the rest of my holiday. I'll see you again on Tuesday, Kevin, when I'm back at work. For the rest of you, I hope you have a lovely break. If you have a break or not working too hard till after Anzac Day, please reach out if any of you are looking for any assistance. Thank you, Kevin. Everybody have a lovely day.
Goodbye, everybody.